Hello, happy Friday. Since we're at the end of the year, we've been talking a lot about tax planning. I wanted to talk about something that I have this conversation a lot with my clients about whether you should turn your LLC into an S corporation. So let's get into it. Hi, I'm Beth Hochberger, CPA, CGMA, and today we're going to talk about whether or not it is time to turn your LLC into an S corporation. Now, I want to start out by saying a little bit it depends on what's happening in your LLC, right? We work with a lot of real estate people. Whenever I have a new client that comes in and they have an LLC and it has been turned into an S corporation with a rental property inside it, it's terrible. Like, I literally cringe on those calls and I'm like, no, who told you to do that? Who told you to do that? Because one of the main differences between having an LLC and going to that S corporation level is that you have to run payroll in the S corp, right? And sorry, I don't mean to crap on the lawyers, but we definitely have lawyers out there who don't know this. I have talked to business attorneys, I have talked to estate planning attorneys who don't know about this requirement that S corporations have to have payroll, that the owners have to be on payroll, right? So if you think about your rental property, especially a long-term rental, you have your long-term rental properties, there's no profits. Unless it's an old property you've owned for a long time, you probably often have losses. So just thinking like, well, if there's losses, I don't need to run payroll for myself as the owner, you're wrong. You're wrong. The IRS can come in and audit you. So if your LLC has real estate, keep it as an LLC. But if you're running a operating business, right? If this was a side hustle that you started in an LLC and it's becoming your full-time thing, if you are offering professional services and you just went out on your own and you were like, let me see what happens, right? If you are in it day to day and it's not a rental property, right? Can't stress that enough. It might be time to think about for 2026, right? For 26, turning it into an S corporation. Now, what I find is usually when the company is netting, right? So take all of your income minus all of your expenses, that's your net income or profits. When that number hits 40 to 50,000, that's usually the time where the taxes start to hurt, right? You're paying two different taxes on this LLC. You're paying self-employment taxes, which is like ish 15% on all of that profit. And you're also paying income taxes on that money. That's a lot of tax. That's a lot of tax. So at that point, at around 50 grand a year, it starts to make sense to turn it into an S corporation. Before that, you have to think about the added overhead and the added complexity, and if that is worth the effort for the tax savings, because it might not be, right? Why is there effort? Why do we have to think about this? Well, when you make an S corporation election, now you have to file a completely separate tax return for that business, right? If before you're running, and I'm talking like single member LLCs, if you were running a single member LLC, it's treated like a sole proprietorship. It's on a Schedule C on your tax return. Not a big deal. You just need the income and the expenses. You're kind of done. S corporation, it's a whole separate tax return, my friend. It is, fully properly done depending on how big your company has grown. You might need a balance sheet, right? And if you weren't keeping track of that before, well, now you have to put that together. You have to run payroll, right? And I mean real bona fide payroll, like filing quarterly tax returns and annual W-2s and all that, not just taking money out, right? You literally have to run payroll which I will say a lot of times when our clients have problems with their business that we need to step in and solve, it often is because of payroll, about things going sideways with payroll. Even when they're with a payroll processor, there's so many times there are problems with payroll. It's a huge headache. So it's not like, oh, let me just check the box on the form, because that's how you switch from an LLC to an S corporation. You literally make like a check the box selection. But there are new things you have to worry about. You should have real books. You should be running in QuickBooks, Xero, like one of these things. Like, I don't care what you use, but you should have real books, and you need to run payroll, right? And payroll is not a DIY situation, right? Don't do your own payroll. You're going to regret it forever. And if you're working with the CPA, now you're filing 2 tax returns. You still have to file your personal tax return, but now the S corporation has to file a tax return, right? So it does add overhead, it adds complexity, but what is the good part, right? When you're making a significant amount of money in that company, now when you remove that that being on your personal return as a single member LLC on your Schedule C, now we're removing the self-employment taxes, that 15% tax. It's not totally gone, right? Self-employment taxes and payroll taxes are 2 names for literally the same tax, right? It's that Social Security med tax. You have to deal with it, right? You have to deal with that now, but you're dealing with it through payroll instead of just when you're going to file your tax return. So it's not gone, but instead of saying all of your profits are subject to that, now it's just what I pay myself on a W-2. That's the only part that's going to be subject to that. So you have some room to negotiate this, right? When you're at 50,000 profit, you don't have a ton of room. But if your business is clearing like 200, 500, a million, when you've got a lot of profits, you don't have to take all of that as payroll, right? Oh God, we don't want to take all of that as payroll. Now what you do is you do a what we call reasonable compensation study, which my firm does offer, and it looks at what are you doing in the business, right? I like to say you're the CEO, you're the chief everything officer, but you might not really be doing everything, but who knows? It goes through, you talk about all of the different tasks, like maybe you answer the phone, maybe you're making executive decisions, maybe you're emptying the trash. I don't know. Depends on the business, right? And what you've got going on. But it looks at all of the things you do. It looks at the level of skill that you have at those levels. And it looks at like geographic data. And it says, well, maybe in your business where you're netting $500,000, maybe your reasonable compensation is only $100,000. So now instead of paying self-employment tax on $500,000, you're paying self-employment tax on $100,000, but we're calling it payroll tax. It's the same thing, right? So you're going to save that 15% on that delta, that change between the 100 and the 500. So there is real tax savings to be had if it is appropriate for your LLC to become an S corporation. It's not always an easy decision to navigate. I highly recommend working with a CPA. If you don't have one to help you navigate this, this is what we do, and it's the time of year where we start thinking about this, looking forward for next year, or maybe even this year if it was a new company and you haven't made that election yet, right? There's a little bit of a wait and see. But don't go it alone. Get in touch with my office. We can absolutely do this math for you, help you navigate this decision.